We're going to start the week with Uncle Warren, his latest investment in the payment space. Berkshire Hathaway earnings came out over the weekend as well. So a lot to talk about really with Berkshire Hathaway. And let's just go ahead and get started first and foremost with this Berkshire buying into Fintech, because, Matt, this was something that I don't think a lot of us were really expecting, but it's also not terribly surprising. I mean, he likes investing in those market opportunities. And I think more than anything, the most interesting part was just the companies he decided to invest in, right?
Right. Well, just to be clear, first of all, this wasn't initiated by Warren Buffett himself. He doesn't understand these companies well enough by any stretch to make an investment in them. This was by Todd Combs, who's one of his two main stock pickers, and he's definitely the more techie of the two. But Buffett gives him his stamp of approval, so we can consider it a Warren Buffett investment.
Sure.
Yeah, the two companies, they're both foreign companies. There's Paytm, which is an Indian mobile payments company, and StoneCo, which is in Brazil. And at first glance, these might sound kind of weird. Like, why would Berkshire be looking at some foreign fintech companies? But they do both have a bunch of Berkshire-like qualities. First and foremost, they are market leaders in their economies. They both have big market shares. They're both very well known in their local markets. So they do have that going for them. It's like how Berkshire invests in Coca-Cola because it's the leading, soft drink provider. Same idea there, just on a more fintechy and rapidly growing scale.
Right.
And only one of them, StoneCo, is the only public one out of the two, I believe. And these are both relatively small investments for Berkshire, $300 million a pop, which sounds pretty big, but not when you're talking about a $500 billion company. So, yeah, I'm glad to see Berkshire finally putting more of its cash to work in kind of outside the box ways. They've had a real issue kind of building up cash. They still have more than $100 billion after spending some of their money on a bunch of new stock investments and things like that. So I'm really excited that they're finding ways to put their money to work in ways that could actually end up moving the needle if these companies prove really successful.
Yeah, I mean, it's no secret. We obviously love these payment companies all over the world. I mean, plenty of opportunity out there. And he noted payments are a huge deal worldwide, is what he said. And this, they already own, Berkshire already owns stakes in Visa, MasterCard, and American Express. So it's neat to see them get some of these smaller firms in there that are a bit more based on technology, like you said. Yeah, definitely a little bit more difficult to understand. But, I think this is also really a testament to the kind of team that he's building there at Berkshire Hathaway. And I think investors need to feel really good about that. Now, when we talk about Berkshire Hathaway, I wanted to mention a little bit about just the earnings that came out over the weekend for them, because it was, generally speaking, a pretty good quarter. They saw a nice bump in operating income there. It did seem like the insurance underwriting profit saw a nice boost versus last year, and I think there were some natural disasters last year that hit them on that line, of course. But another quarter of big share repurchases for Berkshire Hathaway as well, wasn't it?
Well, this is the first time they've been allowed to repurchase shares under the new plan that allows Warren Buffett and Charlie Munger to pretty much buy back shares whenever they both agree it's a good time. Berkshire bought back $928 billion worth of shares this quarter, which sounds like a lot, but the takeaway here is not that this is a real needle-moving thing. And like I said, Berkshire's a $500 billion company. Buying back less than $1 billion worth of stock isn't really anything to get that excited over. But the takeaway is that the new buyback policy says that they can only buy it when Buffett and Munger both agree that the stock is trading at a substantial discount to its intrinsic value. So the takeaway here is that Buffett really considers Berkshire cheap at the current levels.
Yep. And I think right now it's at around 1.4, 1.5 times book, right?
Yeah, which is actually pretty low for Berkshire. Berkshire kind of, if you look at the history, kind of oscillates between 1 and 2 times book. So it's not that expensive in a historic contest. context.
Yeah, and that the former hurdle that benchmark that they had given themselves was 1.2 times book, which seemed very reasonable. But by the same token, I don't have any problem with them lifting that benchmark and just saying essentially, hey, we'll just do it when we feel like it makes sense, because that's ultimately what they're doing. They've got a pretty good track record so far, so I think we can trust them. I do wonder how some shareholders may feel about that versus dividends. I mean, certainly dividends are something that they're going to hear more and more about as time goes on, I think. So I wonder if that's something they're going to feel a little bit more pressure to cave into at some point, but haven't really gotten any sense of anything like that in regard to dividends yet. Have you noticed anything? Do you have any feelings there?
Well, as the cash was starting to build up, Warren Buffett was for the first time ever, I think, mentioned dividends as a real possibility. And then he kind of walked it back over the next few quarters. And his attitude is pretty much say, if you want a 3% dividend from the stock, just sell 3% of your shares every year. He said, trust me to do what I will with the profits. And if you want income off Berkshire, just start gradually selling your stock that way.
It's a fair point.
It's tough to argue with it. I mean, I'm a financial planner, and I would trust my money with Warren Buffett. So I trust him to make the best decisions with Berkshire's income.
Well, if he's good enough for you, he's good enough for me. He should be good enough for all of our listeners. That's the takeaway.